Good morning, everyone. Happy end of July. Here we are. Hey, Johnny. Hey, Guy. Welcome to the room. Good afternoon. Dave. What's up, brother? Hey, Dave, when you have a chance, let me know when you have time to chat. Good stuff. Welcome, everyone, to the tradingsyndicate.org. I'm JJ. Good to see you all. Welcome to the folks joining us on YouTube. Matt, JR, Troy, Only, how you doing? And all those who are not in the chat. Good morning, good afternoon, wherever we find you. And it is the last day of July. Boy, July, all you had to do was blink and July is gone now, eh? Amazing. Time just poof. Hey, Troy, what's going on? How you doing? Well, another month end, another gap. And in the Globex video this morning, I went through exactly what happened and how this gap was created. And the most important thing to know now is that overnight inventory is 100% long. Hey, Lear, how you doing? So this up and down washing machine motion does a couple of things. It takes the weak hands, not all of them, but the ones who don't want to hold. Like like say I was long. If I was long 6408, 6418 in that area, and it started to take out that poor low um, at 96 quarter, I wouldn't have stayed in the trade, right? Even if I was managing a lot of, I mean, I would find it very hard to stay in a drawdown like this. You know, unless it was a massive amount of money that I was managing. And then my buying would be a bit sticky because I saw that the market doesn't take out that low. But still, when the market came back up, it it did a couple of things. First, it took off all the weak hands, the overhanging supply, flushed them into wholesale bids, allowed the shorts. So number one, the shorts who got to cover, right? The smart money shorts, they got to cover. Then number two, the wholesale longs build a position on top of the smart money shorts because they see the bids come in, right? Then we come in, and then that end period where retail is really not supposed to trade from 4 to 4:30 and 4:30 to 5, that was just a rip because of Microsoft and Amazon earnings, right? Now, I don't know how to interpret Fed stuff. So what I do is I just watch the chart, right? So we had the Meta earnings and the Microsoft earnings. You look at both of those stocks, they're doing quite well this morning. And then the overnight was just look at all of the cost basis for the entire S&P 500, for the history of the S&P 500, not just short term. the entire S&P 500 cost basis is underneath us. So we're in pure distribution now. So as I so what did I say? The first thing was the smart money shorts came in and covered, then wholesale longs. But what happened? What produces that big move up? Right? Sure, it's earnings from Micro Squish and Meta, but what really causes that push up is when the dumb money shorts. The dumb money shorts initiate at the lows. Then they realize they're trapped and they go to cover and the supply gets yanked. And that's what causes these massive moves, right? It happens on every time frame. It happens on a minute chart. It happened in Globex, you know. It happened here in Globex. In the Globex, we were trading happily here under 64.58, and then all of a sudden we just got this massive run up to 64.68, right? And then boom, right back down, right? So large orders, right? When a market's at all-time highs, the order flow, the flow of customers coming into the market is not reliable. Okay? It can be very unreliable, right? And you can have very large orders come in and disrupt the market very quickly. Because when a large order comes in today's electronic markets, the order book thins out radically, which means that the market doesn't have very good shock absorbers. For older folks, it's like driving around a 1973 Ford F-150 that doesn't have any shocks in it. It's going to ride like a lumber wagon. Where are my rednecks? They'll know what I'm talking about, right? So they're going to get bounced around a lot, okay? When you have large institutional participation in markets, the order flow is different, right? There you go, Tebow. Large institutional positioning in markets, you get 1976 Cadillac Eldorado price action. It's nice and smooth, right? Because you're trying to build size positions so you don't jerk the market around, right? So there's two different types of price action. Well, there's quite a few, but those are the two major ones that you have to look out for, right? And when you're at all-time highs, so what does that mean for us? What's the practical? Okay, JJ, get to the point. The practical aspect of it is that what should you be thinking on the last trading day of the month at all-time highs? How should you be conducting business? Protect the capital that you made this month, right? Right? You want to protect the money that you've made. Right? There's no sense in making a you know crap load of dough if you don't have any at the end of the month, right? Shrewd, exactly. Be shrewd, be smart, be cagey, right? Don't be a sucker, right? So today, when you trade, take only those trades that you can justify, right? You know when you go and you sit and you pitch an investment idea to someone who's got a lot of money, they look at you like you've got leprosy. And they curl up their nose and they're like, ew, well, I'll think about it. I'll have my people call your people, right? That kind of thing. So when you look at a trade idea, be be a bit of a snotbag. Be snooty. It's your money, okay? Don't throw your money away, right? And the money that you made this month is not house money. It's your earnings, okay? There's no such thing as house money, right? You're not at the MGM Grand, Okay, this is a business. All right? So there's no such thing as house money. If you lose it, it's no big deal. Well, if you lose it, you should. What did you bother showing up for anyway? So be careful. Be able to back up your trades. Why are you taking this trade? Well, because I see supply ran out under this level, so I'm going to buy a little bit, and as soon as it moves up, I'm going to let them have it, right? Or I'm going to short this level because I see sellers competing, right? And as soon as the business reason for the trade goes away, so do you and your wallet, okay? Don't get suckered into price action. Don't get suckered into news, right? That's not for you. Think and act like a cold-blooded killer, okay? Right? Justify your trades. So right now, overnight inventory is long, and we have some serious bids here at 64.48 because every time the market comes to this level, right, it stops and it reverses. Why is that? Because when the market comes to this level here, think of this level like a big glass door, okay? When the sellers get to that level, they look through the door and they see a bunch of buy orders, right? You see all these customers lining up outside that glass door, waiting to get in. So what do? They raise price. Now, if they got to that door and they saw customers walking to their cars, walking away, they will chase them and lower price so they can get rid of their inventory. Their inventory is down here. They're positioned long down here, under 64.18, right? That's why market profile is really good because it tells you really quickly, it tells you very quickly where the position is. It's here and here, right? This was the discount. This is where the bulk of the last 2 days inventory is. They're selling it up here. They could sell it all the way down here and still be in profit, but they would rather sell it at 52 than at 36, right? Because they didn't just fall off the turnip truck. So if you're short, like Lear's short 55, right? What he's trying to do is he's trying to front run these buyers that are all lined up here. He's trying to front run them at 51 and 53, right? And make a couple of points shorting that backfill. Okay? That's a tactically intelligent short. And his stop's probably going to be the top of that period there. I'll zoom in on it in the next chart. So now that you know that there are buyers under 48, let's talk about what causes support. These are unfilled buy orders. If the market breaks 48, it will start filling some of these buy orders, right? And when those buy orders start getting filled, the smart money will drop their bids to try and get the market to follow them lower into the 40s. If that doesn't happen, it'll turn around and whip back up, right? So that's what you're looking for. Let's go see how this looks. There we go. See at that 48 level, did we fill those single prints? Or is there still one left? There's one single print left. Okay? So there's stops at 50. There's stops at 49.5, 48, 3/4. So if this breaks, if this area here, let's just say if 48 breaks, right? If 48 breaks, then all of this candy is subject to falling lower and coming out. Okay? So now there's a guy in our morning session, and every time overnight inventory is long, and I'm talking about shorting, He's like, why would you short it? Well, because overnight inventory is long. And the normal course of business is a move lower, right? Ah, got to get rid of the word should, Raj. Morning, bro. Good afternoon, brother. Should you be going to M&S and buying cake and donuts? No, but you do anyway, right? Right? Should we get a gap fill? Only if the order flow allows us to, brother. Right? I don't know if we'll fill the gap. I would like us to fill the gap, right? Because I think liquidation is healthy in a market, and I don't like markets that don't liquidate because the price action is crappy, right? But if we get down here, now the gap fill is all the way down at 35 quarter, right? Hey, Dan. Now, I used a distribution balance zone this morning, 64.54 half to 59 and a quarter. Double it to 68 and three quarters. And what was our high tonight? 68 half. So it worked. It was off by a tick, right? And then right back down. Now we're into the discount zone. Let me just double check and see where VWAP is. VWAP. Oh, we're under VWAP. Okay. So that's healthy. If we're under VWAP, we should keep liquidating, right? There you go, Lair. You're hitting the 50s. Nice. Nice. Beautiful. Beautiful trade. It's nice to make some money before the open, isn't it? Jeez. Takes the edge off. I don't know what the probabilities are, Guy. I don't think in terms of probability because it biases me. I try to I try to be as stupid as possible coming into the open. And I let the market tell me which way it's going to go. Because every time I think 70%, 60%, all that stuff, I get biased and then I get stuck on that bias. This way, right now, overnight inventory is 100% long, right? And we're getting some corrective selling, which is good, right? Now, if we didn't get this, right, I just watch the chart, right? I'm very, very sort of basic. I don't think in probabilities. All I do is I watch the chart and I wait for my levels to trade at. And if the chart coincides with the way I do business, my trade setup, then I take the trade. So that way I can measure my risk. So for example, right, if I was shorting this market, right, and I wasn't around when this happened, but when it looked above and failed 54 and a half, and I saw the tops of the candles underneath 54 and a half, this is how I trade. It's very simple. Hey, look, we're breaking 48. I would have sold 54, 53, put my stop at 54 and a half, three quarters, and then tried to cover down here, right? Very simple. If the offer starts to lift, right, I'm out of the trade. If I lose my seller, I'm gone. Right now, this is healthy. This is a really healthy correction. Now, when we get down here, let's see what happens. Right? This is a nice normal inventory correction. We'll be looking for 45 as a target. If we start creeping back up over 49 and 3/4, it tells me that the sellers have seen bids, buyers, right? So now you've got a short covering candle, that green candle, right? Watch. So if you're short from above and the market breaks 49 and 3/4 and takes out that 50 quarter level here, that's a warning sign that you should start covering. Does that make sense, guy? That's how we put it together. With the micro balance, it's all about watching the 1 minute candle chart. Exactly, and it's about the reaction at the level. Exactly. I have no clue what the hell it's going to do until it goes there and transacts at that level. Right? I don't want to try and be a mind reader or a psychic. Right? I need relevant information about the business at the time. See, look, there we are at 50/4. Now, if the market, if the offer comes up over 50/4 and we get a 50/2, 53/4 print, then I know that the sellers have seen buyers and they're lifting price. Right? Now, on the next candle in 18 seconds, if the next candle cannot take out 50/4, we'll rotate back down because sellers will start to compete. Nothing about this is random. It's just business. See, look, new candle, top of the new candle, nowhere near 50/4. Sellers are now competing at 50. Market profile. Okay, so pretend market profile. Guy, pretend you're looking at two maps. Okay? This is a map of the city. This is the map of the neighborhood you're in at the city. Does that make sense? So this helps you zero in to what's happening here. Because if you look at this and you try to trade this, right? Especially when the ranges get really big, it's useless as you know what on a bull. Right? It's completely useless, right? That's why you use this. This is a map of the neighborhood that you are currently in. This is the map of the overall city, so you don't go into the wrong neighborhood. Got it? Market profile has to be practical. Otherwise, it's useless. Any kind of chart has to be practical. Otherwise, it's useless. Just stick with us. We'll get you there. Right? My whole goal, right, before they yank my ticket, is to help you guys understand how to trade with common sense in a simple manner. Because up until 1997, 1995, it was simple. People traded with a pencil, a piece of paper, and a 15-minute delayed ticker. They didn't have charts. They didn't have algorithms. They had none of that crap. So how did they make money? Grab a level and watch it. Right? So there you go. The sellers came in, right? So now we're looking for 45. Does that make sense? Now, of course, when you start with us in the room and in my coaching class and things like that, it's not immediately apparent, right? It's not obvious. It only becomes obvious with repetition. Ah, yes, the abacus. You're dating yourself, Dan. Yeah, just chill out. Be patient. Remember, we're opening at all-time highs. We're opening on a gap, right? That's not normal business. So, can anybody tell me what a gap is? Right? A gap is a change in business from the previous day. It's not business as usual. Okay? So when a market has a gap, it means there's a change. So if the gap fills, it means that change is not sticking, right? If the gap doesn't fill, it means, maybe that change will stay put. So down to 47, caught a bid, up pretty quick. It's hard shorting this market because when it comes down and it finds a buyer, it jumps and runs away from the buyer, right? So you've got to be nimble, right? That's why I like training people to trade on a 1 minute candle chart because it makes them fast. Nothing worse than a slow trader. Slow trader is about as useful as a poopy flavored lollipop, right? Useless. Got to be quick, especially in this market. Yeah, just chill out. It's starting to get a little jumpy here, right? A couple of minutes before the open. If you are shorting, there's nothing wrong with that. Make sure you have your bids in. Don't chase the buy, right? Make sure you get your bids in if you're short. Oh, got a little pre-market liquidation in the opening auction. Nice to see. Remember, last day of the month, you don't have to trade, right? Yeah, single print is filled, Jag. Just take it nice and easy. If you can't figure it out, don't trade. Simple clue, right? When in doubt, sit on your hands, right? And we're off. Let's see if 45 works. There should be a little bit at 45. There it is. Now if you're short, short 45, 43 bid, covered 43. All right. Did it again. 42 short, 40 cover. I'm just scalping it. This is the normal correction to overnight inventory. As we come to that previous day high, right, there will be some bids here. Look for bids around 36 if you are short, right? See, look how it's stopping? It stops and starts to reverse because that's where that's called front running, right? So the bid is here at 36. They're trying to get people to pay more. As the market rotates up, the sellers will whack it again there, right? Because that's how you sell. And we should get a gap fill here. This is beautiful. Come on down. See, a couple of ticks before the gap. Right? Now we have everybody above us is trapped long, right? See how we didn't fill the gap? Let the large traders now work this out. Don't get involved in this. Point of controls there. That's all short covering, right? So they'll move away from that point of control. Let's see where the sellers come in. And whack this thing, right? If we break yesterday's high, look for the overnight low. Thanks, Jeff. Some decent short covering here, as would be expected before a gap fill, right? So the market is functioning exactly as it should, folks. Exactly as it should. We clean out the 40s. Let's see. There's 40 quarter, right? Found its bid. Now let's see where they sell into this bugger. Let's see if they front run 45. I'll wait for the next candle, then I'll mark it. Failure to fill the gap, right? Bids. I didn't go long off of that. I wasn't fast enough. But a lot of traders would go long like 38, put their stop at the bottom of that A low, right? So now we have sellers at 43 half. Let's see if we can get down to 40 and a quarter. Yeah, market profile is great. Sometimes you can go overboard on market profile and go down the rabbit hole, and you won't make any money. You have to take those nuances of market profile and make them work for you and make them pay, right? And that way, the only way to do that is to simplify it, right? Let's see if we can. The 1 minute candle is just for day traders. Look at the sellers at 43. Jeez, look at that, right? What's up, Juice? What's a Globex low sweep? Is that you need a special kind of broom for that? You guys like that word sweep, eh? I think of football when you guys talk about that. Or Karate Kid. Sweep the leg. Got some bids at 40. Sweep the leg. Let's see if we can get a rotation going here. This is all price discovery. Come on, let's fill that gap. What's up, Derek? Think of a broom. You guys kill me. Oh, look below and fail of a Globex low. Well, now I understand it. Now I understand it. The sweeping thing, the sweeping thing is just. Hey, look, if I don't make fun of you guys, nobody else will. Let's see if we can fill the gap. Well, there's a lot of terms that are bounced around the internet, right? What's the other one? Oh yeah, unfinished business. Well, maybe you should eat some prunes. Go finish your business. We got a bit of a rotation going here, folks. Looks like we're just kind of rotating here. See if we break out of that. Come on, let's fill the gap. A couple of ticks. Come on. Nope, not yet. So if you were just came in this morning and you started trading, you'd look at that and you'd go, oh, there's a rotation here. And this would be your rotation right here. Right? That's a rotation back and forth in that box. Right? I don't like the fact that it's right above a gap, but you'd be able to trade that, right? Especially if there's no gap there. I don't like this is like taking selfies on the edge of a cliff. Someone's gonna fall off. Now let's see if we can't get up over 39. I'm very short biased here. Let's see if I'm right or wrong. Now we have had it in this market where the market will leave a one tick gap and then blast off of it, but I don't think we're in that situation these days. Come on, one more tick. Oh, dear Lord. One more tick. Come on, give me one more tick. Hungry, hungry short sellers, eh? Look at them come in for it. There we go. Gap is filled. Now let's see, we should get some responsive buying from that. As the market goes back up, they'll sell into it. Underneath the previous day high, you're looking for the overnight low at 31. If you are still short, they'll front run the overnight low, of course. How you doing, Moran? So this is nice and normal, right? Pump and dump, exactly, Zed. Right? This is what we call a gap and trap. You gap the market up, you bring a bunch of suckers in, get them to buy it. Use the shorts to hold it up while you can suck as many buyers in. Then you pull, then you just sell into it. And that's how you distribute size. There's the overnight low. All right, lower references. We're looking for 26 on the bottom. Where's 26? There's my 28 half. So gap filled. There'll be a little bit of responsive buying. Exactly, S-Pill, right? It's an equal opportunity spanking machine. We trap the longs, then trap the shorts. Then trap the longs, then trap the shorts, right? It's all about leverage. You leverage whoever's in trouble, move the inventory in the opposite way, and then you get to abuse them again. Right? It's a trading places moment. Hey Leslie, how you doing? Let's see if there's a seller here at 35. Yep. Seller at 35. Down to a 32 cover. A little bit choppy here, right? As the large traders work out their inventories. Remember, the big move came in the after hours, right? So to take back that move, we'll have to come down to 25 and a half. If we get accepted underneath the overnight low, then 28 and a half, and then look for 26s. Okay? There we go. Nope. Back up over it. There's your look below and fail of the overnight low, Juice. Are you long? There you go. Target's the overnight high. But I'd be happy to get out at 34. Boom. 34. 35. Back in the box. Let's see if we can stay over 35. Nice trade, Juice. Called it out beautifully. Just make sure you hide the gloves. Got to sell it to strengthen this market, folks. Like I said, I would have taken 34. 32 to 34 would have been fine enough for me. So all I do with these zones is it's just cost basis, and this is 4 times discount. The next zone, which will be a different color, is just 8 times discount. I'll just put 4 for now. Because inventory is all above us, there will be resistance, okay? Now, if there's no seller at that overnight low, it'll be a look below and fail of the overnight low again. There's the seller. It's not aggressive. It's not aggressive enough for me. Yeah. It's easy to get an all-time high during overnight, right, Roman? Because you can bully price higher with less capital in the overnight session, right? Exactly, Dave. That's why we're wary of the middle. Exactly. Not as many sellers. Let's try that 32 to 34 again. 33 and 3/4. I'll take it. Small scalp. Back to work. Have a good one. Now, have we cleaned it up enough to accept back over 35? Can we stay above yesterday's high? Right? If we can, we're looking for 38.39. Watch that 35, and if it bids 35, right, it'll rotate up to 38.39 because that's where the sellers were before. There you go, right? You're long 36, sell 37 and 3/4. Doesn't matter to me. I prefer going long in a market that doesn't have any supply. Truth be told, right? Like if you give me a deal, right? If you give me a deal that has like a limited float, like look at Bitcoin. You know, would you rather go long Bitcoin or short Bitcoin? There's only 21 million frickin' coins, right? This entire market, the supply of all the large stocks that make up the S&P 500 are warehoused for like 3 to 4 decades, right? So you look at Apple, it's got 16 billion shares in the float. Less than 1% of the float trades on a daily basis. Would you prefer to go long or short? Right? If it was a 1990s Canadian mining stock, you want to be going short, right? Because liquidation is the name of the game, right? And BlackRock didn't exist. Does that make sense? You have to look at how a market's built, Dan. right? So if a market's built for longs, go long, right? If a market's built for shorting, if there's a lot of liquidating supply in a market, you prefer the short. Does that make sense? I don't discriminate. I'm not like one of these guys who has to short, is a dyed in the wool. You know how some people just get like on this short, it's like a cult, right? But they keep losing money. Well, there's only one, right? There's only 21 million bitcoins. Crap, even I was smart enough to buy the crap at 76,000, right? Supply is not unlimited. No, 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 no. Who put that idea in your head, Dan? No, 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 brother, no. How do you know if there's a lot of liquidating supply? Apple's traded what? 6,583,000 shares out of a possible 15 billion. There ain't no supply, my friend. There's no supply. How do you know if there's a lot of liquidating supply? The offer will move lower and lower and lower, right? If there's a lot of liquidating supply, sellers are competing. So OJ, you go to sell at 5, I go 490. Dan goes 480. Derek goes 475. Roman goes 460. That's liquidating supply, right? There is not unlimited supply. The only thing that has unlimited supply are like Canadian pump and dump stocks. You know, like you see those stocks that go up 300% on, oh, look at that, right to the 44s. Now, ladies and gentlemen, if we take out that A high at 48 and a half, no, don't worry about market makers creating contracts and all that, brother, right? Just watch the offer. See this little red line? This is the secret to all the unlocked hidden treasures right here. When it's going up, it means the sellers have seen buyers and they're raising price. When it's going down, it means sellers are competing to capture the buying. I can't speak to currency and bond markets, but I can tell you when the offer's backing away, price is going to go higher, right? The thing is, you guys don't have to overthink it. Don't worry about market makers. Don't worry about Gamma, Beta, the Incredible Hulk, David Banner, all that stuff. Just watch the offer. I don't know, guys. Just take a look. Take a look at the markets. Every time we have a massive sell-off, the market goes higher. Riddle me that, right? You guys have to learn how markets are structured. Markets will trade how they're structured, just like a stock trades how it's structured, right? It's not rocket science. It's just that you guys have never been exposed to this kind of thinking, right? Why? Because you guys are exposed to think like retail. Think like somebody who puts together a deal and tries to get people to buy it. Think about people who create short squeezes. Competing sellers play out all the time in every different time frame. But it depends on what you're trading. So if you're day trading, right? Yeah, you got sellers at 47. Bingo. Nice work, Lear, right? You got sellers at 47. Let's see where the bid is. Now, how many people do you think How many people do you think are trapped short here? It's okay. You can be theoretical. I anticipate. I'm waiting for your white paper with bated breath, right? But markets are really simple. Markets are frickin' simple. There is a conspiracy to overcomplicate things, right? There's a very, very good saying where I grew up. If you can't dazzle them with your brilliance, baffle them with your bullshit. And that happens in finance every day, right? So now we're looking for 48 and change if we could creep by that 47 seller, right? Hey, Renee, how you doing? There's 48 and a quarter. There's going to be a little selling competition there. If there isn't, it means they see bids and they're going to be selling at 49 and three quarters, 50. Come on. We're ripping the stops now. There you go. There you go, Troy. Substack. I could go for a meatball sub right now. There's 49 and three quarters. So we're cleaning out this market. How many people do you think are short underneath 44 in this mess here? They're all going to cover now. Yeah, every time somebody says Substack, I start thinking about subs. Could be that I'm like doing this intermittent fasting thing. Listen, we're all dumbasses in this market, Juice. We all. There's no way you can be a trader and not go through the spanking machine at least once a day, right? Right? We all go through the spanking machine. It's just part of the business. The thing is, it's okay to be wrong. Just admit you're wrong quick. You know, just admit you're wrong quickly and get the hell out of the bad situation. Yeah, it's pretty much just one meal a day. So we didn't take out the close of yesterday. Kind of important. And now, the next period's going to open here in 10 seconds. Okay, let's see what happens now. You know, guys, when we go red and we get stopped out, we got to learn how to shake that off. Use that information. And what's that word you guys like to use? Pivot. Now, now what are we going to do? Just go back and forth here for a bit. Let me kind of zoom out. Oh. Super Mario? I don't know what that is. I never played video games. Well, not past like 1984, so it's been a while. Look below and fail of 45. I know there's going to be sellers at 48, 49. Uh, Gotta say, I'm a little slow on my execution this afternoon. Pac-Man and asteroids, exactly. Exactly, Troy. Hey, when we wanted to play video games, we actually had to like go out of the house into like some smoky arcade. I do bull for trading. I do, Troy. I remember that one. All right, guys, watch out if you're short and we take out that A high at 64.51, be careful. Right. I'm not predicting we do, but if we do, I don't like this. I don't like the way it's looking for the shorts right now. We need a seller to step in here soon. Oh. So right now, just in the last half hour, you can tell that the shorts are trapped under 44 because that's where that B low is. That's the nice thing about letting the market build out some structure because now you know, okay, the shorts are trapped under 44, right? So they're going to start creeping the bid up like they have been, right? But we need an aggressive seller in this area to come in. Otherwise, we're going to creep back up to VWAP. Where is VWAP now? Oh, we're underneath it. Above it. Oh, crap. Somebody should have told me. Oh, okay. That makes sense now. We're in distribution above VWAP. See? Do you see this rotation? It's the same thing here. Let me just get rid of this. You can see the rotation here. I need another coffee, Lear. Okay, good. We got a little bit of liquidation. Can we get under 45? If we can't get back up over 45, 46, we're going to come down back into this little green box. Nope. Nope. That 44 bid's still there. Right. 44 bid's still there. Let's see if we can creep her past VWAP in the open if you're long off a look below and fail of 45. Put your offers out. Don't be greedy. Right. Sell into that strength. Right. Long 46. Hell, I'll sell 47, 47 quarter, 47 half, 47 three quarters. Right. I'm flat. I wanted to short. I wanted to short when we got here. Then I saw it creep back up over 45. I'm like, nah, not going to happen. Right. There's the rotation back up. That's the beauty about rotation. You know, it can totally help you from getting, because what I would have done before I knew about these things, I would have been short 45, right? And then when it went back above VWAP, I would add to it and then add to it at 48 and then get stopped out at 50 and go, right? When then it would turn around and rotate back down. So learn about rotation. And that's what we teach at the trading syndicate. See, now it's going to rotate back down. Slowly. Now, if we get past 50, 51, you'll be looking for around 54. See if we can get some rotation down, though. There we go, right? So it just rotates in a box, just like this little green box here. Right? It's the same deal, right? And after a while, you'll get used to these rotations, and you'll be able to trade them. See? Just back and forth, right? See? Rotation of inventory. Now, the problem with this market for short sellers is you keep price stable, right? Price stability attracts buyers. That's the only problem with shorting these markets, right? The more price stability you have, the more buyers you start to attract, and then you know what happens. Folks in the coaching class, are you up for a price action lab at 11? I'll be on. I'll put a Zoom link in the coaching room at 11. We'll do a quick half an hour or something like that. If any of you are interested in the one-on-one coaching program, DM me. Be happy to do a phone call and assess your trading needs. Yes, Juice, you can use this rotation to draw balance levels off. Like say you just woke up now and you started trading, you'd find a rotation like this one and work off of it. Definitely. And the funny thing is about this balance and rotation stuff is you can use a distribution balance or an accumulation balance. And a lot of people will say, you know, JJ, I left the balance zone on from yesterday and didn't update it, but it's the levels still work. Why is that? It's really a simple reason. The reason is because we're just rotating the same inventory every day, back and forth, right? So in the morning, we're still doing the same business as the afternoon, right? So we're still selling ES contracts in the morning and in the afternoon. It's not like we're running a sandwich shop in the morning and a tire store in the afternoon. It's the same business. It's the same inventory. That's why my balance levels from 2020 still work 5 years later. Oh, good, some liquidation. Now let's go find the bid. We got some thirsty short sellers waiting for some cover. Let's see if we can get down to 38. Oh, this is healthy. So what just happened was we were distributing up here and we had to put it on sale. So we're just putting it back on sale down to cost basis. Yeah, you can use balance zone. No. You can just draw balance zones for Apple if you want. Here, I'll give them to you. Balance works for everything because all markets are about the acquisition and distribution of inventory. That's why it's a market. No, Colin, it does not. No. And that's a good thing because you don't have to look at too many things, Colin, right? You don't have to look at too many things. The less that you look at when you're actually under fire trading, the better. So my Apple balance zone is 132.21 to 158.10. And you double it to 209.89. That's why it's going back and forth in this level. If Apple can get above 214, 215, then you're going to have sellers at 226, right? But we'll see what happens. It's earnings today for them, isn't it? Balance zones work for anything. You can use it for currency. You can use it for... I've never tried it on bonds, but equities, all the indices, anything that has a an inventory. And all markets have an inventory. Inventory is everything. I learned about inventory in 1995. Was it 96? We were doing a financing, and we brought in this guy from Hambricht and Quist. I don't think you guys remember. It used to be a big technology investment bank. Hambricht and Quist, and he was a convertible bond trader. And he came to look at our deal. And I asked him, I asked him because they had just done, remember iOmega, they used to make zip drives? They had done a convertible. And I asked him, how did that convertible go? And he went, I got so much of that crap in my inventory still. Do you want to buy some? And that's when I learned about inventory. Balance zones work in all time frames. Inventory, every trader has an inventory. It's like a storeroom where they put their products that they have to hold during the day and overnight and over the month. That's why when you guys see those big block trades after the close in companies like Apple and Microsoft and Nvidia, you guys ever see those big multi-million share prints right at 4 o'clock? Those are what we call inventory prints. Those are trades that a trader has been working for a client and they print it from their inventory to the client account. That's why you'll see two prints of the same volume. Because every time you move a position, you have to print the trade. Well, not much is going on now. It's kind of slow, isn't it? Oh boy. Well, looks like ES went on coffee break. Anybody have any questions? Oh, it's pretty slow. I look at, yeah, every morning, Troy, I look at this chart, right? I look at this chart every morning and I go, okay, well, the inventory is underneath us or it's above us. I look at the levels, right? So these big levels like 65.47, 63.06, these are all derived from 24.75 or something like that back in 2000, right? That's where all these big levels like 60.71 or 60.65, 55.84, those are all larger, longer term levels. And they still work when you extrapolate them, right? But intraday, it's all about. So, Troy, today inventory was long. It corrected. Then we found where the short sellers were really trapped. They're really trapped underneath yesterday's close. So the market rallied off of the 30s all the way up to 48. Right? And all we're trying to do is put an execution plan around that movement of inventory, right? We're like those kids on skateboards. When the car goes by, we want to grab the bumper and go for a little ride. We're not driving the car. We have nothing to do with it. We're just trying to hitch a ride, right? So we're trying to figure out where to get, you know, where to get on, where to get off, and hopefully we don't get run over by something. We're retail traders. We're the scavengers of the finance market, right? Imagine vultures just flying lazy circles, right? That's what we are. Now the kids are on e-bikes. Yeah, you know what I saw yesterday? I saw this guy. He was on a unicycle and he was standing on this wheel and it was just booking. It was going like 25 miles an hour down the street. It's like, what the hell is that? So now, ladies and gentlemen, this is you have to know when to trade and when not to trade. This is do not trade that, right? You get these barcode looking candles, right? And see, this is where market profile is useless, right? There's nothing here that gives you any useful information. So you've got to go to the candle, right? Okay. Little liquidation is good. Hey, Joe Mama, what's going on? Rolls Royce. I haven't looked at Rolls Royce. Hey, Taco, back to work. Have a good one. We might get a P profile today. We'll see. A lot of unknowns here. Four to five. That's not bad. Not bad at all. I'll take that. I tend to really limit my trading around the last 2 days of the month. I'll scalp. We got a brand new month tomorrow, so it's all about keeping everything we made. There might be some better trades later on. It's kind of slowing down right now. Let's take a quick look at some of these. Yeah, you can see the balance thing works for everything, folks. You can use it for the SPY. You can use it for IWM. You can use it for NQ. You can use it on candle charts, right? You have balance zones within balance zones. So you can keep track of. Basically, what we're doing is we're keeping track of the movement of the inventory, right? So there's Amazon. Amazon's already at above 8 times profit of that balance. Have a good one, Taco. See ya. Ah, good to know about Rolls-Royce. I let my subscription for the Financial Times lapse. I got the introductory offer, and then I think they were charging me like $120 a month. I'm like, that's too much. Bloomberg and the Wall Street Journal are much cheaper. What's that, Troy? Is that question for me or is that for Taco? I assume you use two SD zones because similar to Bollinger Band logic. I have no idea what that even means, brother. That must be a question for Taco. He's a CMT. Okay, folks. Now I'd be looking for the previous day high at 34 and a quarter. Guy, yes. What I do is I do my balance zone at about 5:30 in the morning, UK time. And unless the market moves, 30, 40 points higher, I'll just keep doubling them. It works well. No problem. No, no, I was asking Troy because he's asking about Bollinger Band logic, and I know that's not a question for me because I have no idea what it means. Yeah, I do the London session at 7:30 in the morning. Exactly, Troy. Check your DM. Whereabouts are you, guy, in London? Are you in London? Well, folks, that's it for me for this morning. Thanks so much for being with us. We'll see you tomorrow. Oh, Southampton. Cool. I'm up in Liverpool. Have a great morning. Thank you so much for joining us. We'd ask you if you hopefully like and subscribe. It keeps the algorithms fed. And please join us at thetradingsyndicate.org. We always have some sort of a special going on. And I promise you, you'll learn more with us in a month than you will anywhere else. And it'll be cheaper than going to Starbucks. Thanks, everyone. Much appreciated. Have a wonderful, wonderful morning. Trade safe out there, okay? And don't take candy from strange market makers. Have a good day, everyone. Bye for now.